Welcome back, and today we're doing a requested video. We were asked today, how do I build my credit if I am a beginner? And this is a question that I get asked so many times, so many different ways, and so many different nuances are added to this question every time it's asked, that I always give the answer that it's going to depend on yourself, your financial situation, where you're trying to get to, and how quickly you're trying to get there. Now, what I'm going to tell you guys today is the basic information as well as some quick tips on how you can improve your credit score from 0 to 700 within a few months. All right. Now, with this information that you're going to have to take and utilize it to fit your profile. If you have questions about that, feel free to reach out to me and I will help you with navigating to determine what you need to do for your particular credit profile. However, the best thing that you can do is build a well-balanced profile. So to start off, when you're first building your credit, it can be kind of difficult because when you start building your credit, you have to determine whether you're going to go for a unsecured route, a secured route, a consumer finance route, all these different routes. Now, I will tell you personally, I don't recommend the consumer finance route to anyone. However, I do understand that, in certain situations, it can be your way to go. But in most situations, I recommend that you try to find a secured or unsecured card to begin with. Now, one of the biggest roadblocks that I see for when we're looking for secured cards is that a lot of our secured cards are going to want a security deposit of at least $200. Okay. And what I have found for that is if you're going for a bank issued secured card and you don't have a lot of money, you've got two real options here. All right. So option number one is going to be to get a sign up bonus from a checking account or deposit account. Like for instance, Capital One 360 right now has $150 sign up bonus. So you get that $150. When you get paid, put $50 with it, put that together, go get a secured card. So that's going to be my option number one. Option number two is when you get paid, go ahead, put the $200 on the secured card, and every single month when you get paid, pay off that secured card and then swipe the card up again. And as you do that, it will allow you to not pay interest because you're paying your balance in full. You're also getting the card, so you're putting on those positive payments, and you're building your report to begin with. Okay, and those are going to be two ways that you can really start that off and kick it off. With doing option number two, you have to be careful because if you're not paying your balance in full, you will end up paying interest, and it is risky in the case that you ever have an issue with your income before you're able to apply for more credit. Okay, now option number three is going to be my bonus tip here, and that's going to be to actually, now like we said, option number one, you were getting a sign up bonus and paying for it. Option number two, you're going to be kind of revolving a balance. And then you have option number three, which is where you're going to be actually going to get a secured card that has a smaller security deposit, like the Capital One secured card. So when you go and get a secured card, there are certain secured cards that require only a $50 or $100 deposit. So if you can take those options, look at those as well. Now, the next option is to look at secured loans. So you can always put up your own collateral, and then you'd have to, make those monthly payments. With Navy Federal, there is a trick to where you can actually put up your collateral and get your collateral back. So if you watch my video on that, it goes step by step in detail of how you can actually put up $250 and get $250 back immediately. And every time you pay your loan, you will actually be right back reimbursed. So if you watch that video, that's going to show you another way to, very inexpensively, probably $10 or less, add another positive reporting installment trade line. Now, that's something that you have to be very aware of as well, is what type of credit you're adding to your report. Depending on what you're applying for is going to be depending on how much of each type of credit you want. And so therefore, you're going to want to have diversity and have both installment credit just as well as having revolving credit. You don't want to have a very unbalanced profile. You want to kind of have some of both. If you are applying for homes or cars, it's better to make sure that you've had some type of installment debt to show that you can make regular, consistent, on-time monthly payments. That is a big help for you getting approved for homes and auto loans. All right, now the next thing is make sure that your utilization is low. So pay your card on your due date and wait to use your card again until after your statement date. Those 2 dates will be on your statement. If you're ever unsure of those dates, then pay your card, wait a week, because usually most cards do not take longer than a week to report. And always go back and check your credit report. It will actually give you the date that your bank sent it over, so that way you can check and find out what your statement date is. So that will be of help to you as well. Make sure if you're, building your credit now, but you've never had credit in the past, and maybe you had a hospital bill or anything like that, make sure that you're getting those accounts either, disputed if they're, reporting inaccurately, or make sure that you're getting them settled or, paid off if they are reporting accurately, so that you're showing your bank's responsibility. The only way I ever really recommend not paying something on your report off is if it's about to fall off, and then you can let it fall off. And then if it ever comes back, you can dispute it off and you won't have a problem. And that happens every 7 years. So it's not like that's something that's common or something that happens often. So just remember that whenever you're applying for credit and you're building your credit. My next tip is to make sure that you are not applying too quickly. Try to space out your applications at least 4 months. 6 months is good. A year is great. And 2 years is even greater. The more that you space out your applications, the higher that your average age of accounts goes, the more likely you're to get approved. And then, of course, the higher higher limits you're going to get approved for. Once you do get into higher limit cards and unsecured credit, make sure that you are applying for accounts that, even though they are, high limits, they have good terms otherwise, as far as their benefits, their interest rates, all these other things. Because it doesn't help to have a $30,000 credit card if the interest rate on it is 30%, because you're going to be paying super large interest payments and you're never going to pay that card off. Or if you do, you're going to have paid so much in interest that you could have paid the card 10 times over. The next thing that you want to do is look for accounts that suit your terms, your credit needs, and suit you at your part of your credit journey. So if you're beginning, it's okay to have, an open sky card or something like that if you want to dodge inquiries. Um, I personally recommend that you do dodge annual fees in the beginning because you don't want to have to sit with the dilemma that most people end up in as to, do I close out this account and lose the age, or do I continue to pay an annual fee for a card that doesn't give me any benefits compared to my other cards? And now you're going to be sitting in opportunity cost situations. So to avoid ever going into those situations, I would recommend just not applying for cards with annual fees if they do not have a good benefit structure. If you're unsure of the benefit structure, if you're unsure of the interest rates or any of those things, once again, feel free to reach out. Feel free to ask others. Um, you know, we don't like to talk about finances with others, but a lot of the times, if we just ask the right questions, we can avoid poor situations in the future. The next thing that I wanted to talk about is your credit inquiries. When you first start off your credit journey, you have to understand that you are building, and with building, you're either going to have to create a very strong foundation, or you're going to have to make sure that you're 10 times as responsible. So if you want to use up a bunch of inquiries at the beginning, just remember it's going to make you have to space out your applications a little more as you're building. However, it will protect you because, 5 positive payments, having 5 open accounts is going to be much different than having 1 open account, because when you miss 1 payment, it's going to take you down a lot less than it is if you miss a payment and there's only 1 payment. So just be aware of that and think about that, and balance it out according to your individual credit situation, your individual credit goals. And the last thing that I wanted to add is that when you're building your credit, make sure that you know your credit factors, you know how much they weigh in your FICO score, and you're aware of the different FICO models, because you want to build your report to cater to the model that you are applying with. So if you know you're applying for a mortgage, cater towards installment credit. That's what they want to see. If you're applying for credit cards, cater towards revolving credit. If you're applying for an auto loan, find out what auto model the bank is pulling from. Some auto models like previous auto loans, some of them just like installment credit, some of them want to see a mortgage, some of them want to see revolving credit. So cater to what that particular bank wants to see. When you do that, you're going to come out successful on the end every single time. And lastly, remember to check out more videos on this channel. Check out more channels on YouTube. Check out other people and become aware all the way around. Make yourself well versed in the credit realm. Make sure that you're checking out the videos that I have with starter cards, beginner cards. Look at different cards that you can get with no credit inquiry, or even with an inquiry, at the beginning, that are not going to be checking hard on credit and are going to offer you an opportunity to get in the door. Look for pre-qualifications and other methods to allow yourself to build up your credit profile without doing so much guesswork. The more work that you can do without guessing, the more successful you will be on your journey. And as always, thank you all for watching. Thank you all for tuning in, and we'll see you guys in the next video.